Welcome to the Edge Market Update for the close on Friday, August 25th. And we had the Pro Farmer Tour results that came out today officially. That took place all week this week, and they come up with a national U.S. corn yield of 172 bushels per acre and 49.7 bushels per acre on the U.S. soybean crop. So that is what the Pro Farmer results were for 2023. There are concerns over weakening basis in the cash grain markets this fall due to large Brazilian crops and low water levels on the U.S. River system that may put a damper on basis for fall delivery. And the southeast portion of the U.S. will require less trains than normal due to record large crops in that southeastern region, especially Ohio. This may weaken basis even more at elevators that are reliant on rail because they will not be sending as many trains or getting as many trains up north as they'll source a lot of that corn closer to those chicken farms and all the other livestock producers that need corn for feed. But there are some also concerns over production in India. India typically has monsoons through the month of October, and those are actually drying up right now. There's no rain for the next 2 weeks over there. Wheat is really starting to turn up, and rice is at a 12-year high. So typically they get these big rains through October, and that's not happening. So from a world demand standpoint for grains, could have some pretty good demand once Brazil is out of their corn and soybeans from their record large harvest. But we'll go ahead and get started with new crop corn. The December contract, we closed today, Friday, at $4.88. We couldn't quite break out of this 20-day moving average. I really wanted to see us close above that 20-day moving average, above 492. We traded barely above it today and sold off back into this support box that we've really been consolidating inside of since the middle of August. Really wanted to see us break out of that today. Just couldn't quite do it. Perhaps maybe we can do that next week. So support right now is at 485 level, which is a 9-day moving average. And then obviously our lows from earlier this week and prior weeks at $4.73. Did not want to see that be given up here, or else that would be bearish here in the short to intermediate term. However, would flip pretty bullish here if we could get a close above that 492 level and start attacking this downward trend line from the June and divergent July high. That would next week be in about the 515 to 510 area. The 50-day moving average is at 521, so would really like to see us start challenging those levels if we can. Certainly, strength indicators, we did actually break out of this negative divergent trend line. Not very powerfully. We've kind of sputtered out here. We'll see if we need to retest this lower and bounce, or if we can perhaps maybe move higher here and get to a neutral reading on corn. Money flows slow but steady. We are moving higher and almost back to a neutral level. Long-term momentum, we still remain in this long-term downtrend that started with that peak in late June, followed by the peak in late July, and we are almost turning this back higher here, perhaps signaling a bottom, but really need some confirmation and would like to see these break above this negative trend line right there. So my goal for next week is to break out above this 20-day moving average and test that 510 to 520 area and see if we can break out from there. Moving on to new crop soybeans, we have broken out in price. A really good looking chart here. We did close today at $13.88 on new crop soybeans, but we did break out of this negative trend line here, consolidated pretty well throughout this week. We opened up Sunday night higher. We tested this gap that I referred to last week, ended up coming back down into the middle of the week, held the 50-day, the 20-day, the 9-day moving averages. All of them converged as support, and we bounced very nicely to end the week and actually closed well above this negative trend line here. So moving forward to next week, really want to see us break out of this 1391 level. If we can do that, I really think we could start moving higher to this $14 range, even perhaps up to that $14.20 to $14.30 level, depending on how much bullish fundamental news we get. I will say oil initially broke out a couple weeks ago, and we have been back testing that breakout level, and we did have a strong close on oil as well today on Friday. So that is supportive for commodities as well. So really would like to see us continue to move higher here. But for now, if we do not want to see us close back below this trend line, that would be bearish in the short term. We do have pretty good support levels here in the high 1340s with these moving averages, and then the 50-day moving average is at 1333. So if we were to fall back below, would really want to see these levels hold, or else that would be considered a fake breakout, which is not bullish. It's a little bit bearish. But again, for next week, would like to continue to see this price move higher. Hopefully we get some fundamental news to help support that as demand remains strong here domestically for new crop beans. Strength indicators, we do have a negative trend line that we broke out of. We had positive divergence here building. I mentioned last week, tested this level and actually broke out. So that is bullish. Money flows are bullish right now. They were overbought here the second to last week of August. We came back down and corrected a little bit this week, and then now today at Friday's close, we are back above 80, a space where I would consider to be pretty strong, and one of the factors that I look at when I'm deciding whether or not to make a grain sale, and that is right where you want to be with a mark over 80, a reading over 80. Long-term momentum, we were negative here in the month of August. I should say declining. We're positive above this trend line, or the neutral line here, excuse me, but we are starting to curl back higher. We confirmed that today, and maybe we can continue to see this long-term momentum of this new soybean market continue to rise here as we go into harvest. It sounds like there's some weather premium entering back in the market due to concern over hot and dry conditions. How much are these pods going to fill up with these high temperatures that we experienced this week? So we'll continue to watch that, but obviously the trade put some premium back into these markets on the news of the hot and dry weather. With that, if you have any questions, please reach out to us. We'll continue to monitor these markets into harvest time. Please reach out with any questions, and we want to thank you for your business and have a great weekend.